Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KAISER Aluminum CORP quarterly report. KAISER Aluminum Corporation offers a diverse range of products and services across various industries. The company's product portfolio includes Aero/HS products for aerospace and defense packaging products for beverage and food packaging industry, general engineering products for various applications, including military vehicles and electronic devices, automotive extrusions for structural components and safety systems rolled, extruded, drawn, and cast billet aluminum products for industrial end uses. In addition to its product offerings, the company also provides fabrication services, including sawing and cutting to length. KAISER Aluminum Corporation sells its products directly to customers through a global network of sales personnel and independent agents in various regions. The surge in KAISER Aluminum Corp's stock price by over 45.32% in the past year can be attributed to several key factors. The company's exceptional third-quarter earnings, with adjusted earnings per share more than doubling analyst estimates, significantly increased net income and net sales. Additionally, a favorable metal pricing environment and operational improvements contributed to its impressive financial performance. KAISER Aluminum also raised its full-year 2025 adjusted EBITDA outlook by 20–25% year-over-year, indicating a strong growth trajectory. The company's strategic capital investments, nearing completion, are expected to enhance profitability and capitalize on projected demand increases. Furthermore, KAISER Aluminum maintains strong liquidity and has improved its debt management, reinforcing its financial flexibility. The inclusion in key market indices, such as the Russell 2000 and S&P Small Cap 600, may have also increased investor interest. Overall, KAISER Aluminum's solid financial health, effective operational strategies, and promising outlook have collectively contributed to the significant appreciation of its stock price over the past year. The primary drivers of revenue growth and decline can be identified from the financial summary. On the growth side, a $95.8 million increase in net sales contributed to 12.7% growth. Additionally, hedged cost of alloyed metal increased by $107.1 million due to higher prices and lower shipment volume. Improved product pricing and mix also played a significant role, driven by favorable metal costs and reduced major maintenance expenses. Strong customer demand in the packaging end market led to an $8 million increase in inventory, while capital investments at Trentwood facility further boosted revenue growth. On the other hand, revenue decline was primarily driven by the Aero/HS products segment, which experienced a 29.1% decrease in growth. The other products segment also saw a significant decline of 87.1%. Furthermore, coatings end market shipments and GE Power end market revenues declined, contributing to overall revenue decline. Net income and profit margins experienced significant growth in 2025 compared to the previous year. Net income increased by 348% to $39.5 million, a substantial jump from $8.8 million in 2024. This increase was also evident over 9 months, with net income rising by 84% to $84.3 million. Profit margins also saw notable improvements. The operating income margin rose from 1.8% in 2024 to 5.8% in 2025, indicating a significant increase in operational efficiency. Additionally, the gross profit margin increased to approximately 44.4%, up from an unspecified level in 2024. These changes suggest that the company's financial performance improved significantly in 2025, driven by both revenue growth and enhanced operational efficiency. The company is generating a significant amount of positive operating cash flow, with net cash provided by operating activities reaching $123.7 million in 2024 and increasing to $132 million in 2025. This indicates a steady growth in the company's ability to generate cash from its core operations, providing a solid foundation for future financial stability and success. The company's debt level has remained relatively stable over the past year, with a slight decrease from $1,042.9 million to $1,041.6 million between December 31, 2024, and September 30, 2025. However, borrowing under the revolving credit facility increased by $290.4 million in 2025, indicating an increase in debt levels. In contrast, interest expenses have seen a significant increase from $10.7 million in 2024 to $12.4 million in 2025, representing a growth of approximately 15%. This suggests that the company's debt level and interest expenses have changed significantly over the past year, with an emphasis on increasing interest expenses. Management's outlook and strategy. The company is prioritizing premium pricing and long-term profitable growth by establishing itself as a supplier of choice through exceptional customer satisfaction. This will be achieved by focusing on demanding markets such as aerospace, general engineering, and automotive, where the company can leverage its core metallurgical and process technology capabilities. To mitigate metal price fluctuations, management plans to hedge and implement related programs. The company expects strong demand in the packaging end market and will continue to invest strategically to strengthen its competitive position across all end markets. Key initiatives include improving manufacturing cost efficiency, product quality, and operational security, as well as investing in capacity expansion, sustaining operations, enhancing product quality, and increasing operating efficiencies through capital spending of approximately $130 million in 2025. The company has a history of paying dividends to its shareholders. In fact, it has been consistently declaring and paying dividends for at least 2 consecutive years, with $0.77 per common share paid out in both 2024 and 2025. The total amount paid in dividends was $38.5 million in 2025 and $38 million in 2024. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. The total inventory has increased significantly, with a notable rise of $100.2 million on page 18. Additionally, the hedged cost of alloyed metal and manufacturing costs have increased, while freight costs have decreased, indicating some improvement in supply chain efficiency. However, the increase in inventory from December 31, 2024 to September 30, 2025, by $29.9 million, page 37, raises further concerns about potential disruptions. The explicit concern about inventory buildup on page 49 underscores the need for careful management of these issues. That concludes the financial summary for KAISER Aluminum CORP. Feel free to comment below, and I will be happy to answer them when possible.